good to have you join us today. Hello and welcome to Business Daily. I'm Lee Ji-yoon in Seoul. We have a lot waiting for you today, so let's get started with a glimpse of today's highlights. Korea's underground economy reached the levels of over 30% of the country's gross domestic product last year, growing by 500-fold over the past 4 decades. Samsung is looking to set up a new team to develop components for self-driving cars as part of efforts to find a fresh growth engine. But first, President Park Geun-hye has nominated ruling Saenuri Party lawmaker Yoo Il-ho as Korea's new finance minister today. If confirmed by the National Assembly, Yoo will replace Choi Kyung-hwan, who is expected to run in the April general elections. Now, while the president believes that Yoo is the right person to carry out the government's desired economic reforms, he will likely face mounting challenges both at home and abroad. In fact, economists at the World Bank have raised concerns that the slower growth seen in emerging markets since the tail end of the global financial crisis could be part of a longer-term trend. And Korea is, of course, no exception, with the economy widely expected to only grow in the 2% range next year. Our Hwang Jae has this report.
Emerging economies are at a crossroads facing the risk of a slower growth era. That's according to a report by the World Bank. It says the growth rate in 24 emerging countries, including China, Brazil, and South Korea, dropped to the 3% range this year from 7.6% posted 5 years ago. The United Nations has also slashed next year's growth forecast for developing countries by 0.5 percentage points to 4.3%, while leaving that of advanced nations unchanged at 2.2%. From the early 1980s until the global financial crisis in 2008, emerging countries led global growth and posted record growth figures. But their performance in recent years has weakened due to slowing global demand and plunging commodity prices. Many are concerned that Korea is also part of this protracted slump, especially as the Chinese economy is moving to a slower yet safer and more sustainable growth, focusing on domestic consumption over government investment. Bilateral trade with China accounts for a quarter of Korea's total trade.
Slowing growth in China is not a temporary trend. Coupled with tumbling metal and oil prices, the outlook for Korean exports look pretty dim for the foreseeable future.
Given that major private financial institutions expect the economy to expand in the 2% range in 2016, while the government targets 3.1% growth. To do so, the government has pledged to push through structural reforms to improve the business environment and tackle issues like the nation's rapidly aging population. However, experts are skeptical about completing such reforms, with general elections set for next year and the presidential election set to take place the year after. Hwang Jae, Business Daily.
Meanwhile, as crude oil production continues to surge, a liter of gasoline has now become cheaper than that of Coca-Cola here in Korea. This is according to Korea National Oil Corporation and Korea Consumer Agency. Now, compared with Coke at $1.50, the nationwide average price of gasoline in the third week of December was about 30 cents cheaper. Over in the U.S., the average price of gasoline fell to $1.99 a gallon, or around 50 cents a liter on Sunday for the first time in 6 years. Experts say the main reason for the decline is as global supply continues to outpace demand. Industry watchers also say that oil prices will most likely remain low well into next year. Now, given the nature of it, tracking the size of a country's so-called underground or shadow economy is no easy task. The Korean government wants to target business activity that is unreported or underreported because it costs the nation a fortune in lost tax revenues. For an idea of how big the underground economy is in Korea, here's our Oh Soo-young.
The size of Korea's underground economy ballooned to an all-time high last year, reaching almost $380 billion. According to a report by the Korea Development Institute, this accounts for roughly 30% of Korea's annual GDP, and the report attributes the vastness of Korea's underground economy to the rising demand for cash, fueled by low-interest policies and growing economic uncertainties. Over the past 4 decades, the undocumented market in Korea has grown more than 560-fold. To crack down on unregulated business activities, the Korean government has been enforcing various measures. These include tax deduction benefits, requiring identification for financial transactions, and issuing cash receipts. These initiatives seem to have worked to a degree. Experts say that without such measures, the scope of Korea's underground market would have reached some $490 billion last year, or roughly 40% of the country's GDP. To bring the shadow economy into the light, experts say more effort should be taken to formalise unregulated activities, such as strengthening cash receipt requirements and issuing electronic transaction bills. Oh Soo-young, Business Daily.
The growth of Korea's mortgage market is expected to contract sharply in the coming years. According to local banks on Monday, the target of increase for home loans at most commercial banks has been downsized to around 5%. This year, the banks saw an average 10% rise in housing loans. As part of efforts to curb the country's snowballing household debt, Korean banks will tighten guidelines when screening applicants for loans starting next year. The banks are also focusing on risk management amid uncertainties following the U.S. Federal Reserve's rate hike last week. And now it's time for a look through last week and this week's stock market action. And for that, we have economics reporter Choi Jin-seok from SBS CNBC joining us on the phone today. Hello, Jin-seok.
Good afternoon, June.
Let's get started by looking at the Korean stock market. Tell us more about Friday's close and its overall performance last week.
Okay, last Friday we saw quite a mixed picture in the Korean equity market. The Kospi retreated by 0.1%, largely due to the sell-off of blue chip stocks. However, the Kosdaq rose by 1.4%, continuing its rally of more than 1% for 4 consecutive sessions. As the Federal Reserve, or the Fed, raised its benchmark interest rate, global stock markets lost steam after rallying right after the Fed's decision. But the sentiment in the Kosdaq market was boosted by foreign investors who bought more than 33 billion Korean won, or $28 million worth of stocks. On a weekly basis, though, both indices showed strong performance. The Kospi rose by 1.3%, while the Kosdaq jumped more than 2%.
Well then, how did the Korean stock market close on the first day of this week?
The Korean equity market bucked the negative trend from overseas, finishing the first session of the week with a slight uptick. The Kospi rose by 0.3% to close above 1980, while the Kosdaq closed nearly flat. There were both positive and negative factors in the market. The price of West Texas Intermediate fell below $35 a barrel last Friday, adding selling pressure of the so-called oil money, or investors from the Middle East. On the other hand, news that Korea's credit rating was raised by Moody's boosted the investor sentiment. Institutional investors were the only net buyers, while foreigners still dumped stocks. Institutions bought more than 200 billion Korean won, or $170 million worth of stocks on a single day.
Now, what kind of market events are lined up for this week then?
Yes, as I said earlier, Moody's Investors Service, one of the 3 major credit rating agencies, said on Saturday it had upgraded Korea's issuer and bond ratings to a AA2 from AA3. The highest ever for the country, and changed the outlook from positive to stable. I would say it is important to see how this decision will affect the sentiment among foreign investors this week. According to Korea Exchange, foreign investors changed their position from net buying to net selling on the Korean market during the second half of this year. Through November, foreigners were net sellers of $154 million. In other words, foreigners entered the so-called sell Korea mode for the first time in 4 years. Weakness in oil and troubles in high-risk, high-return corporate bonds are keeping investors, especially from the Middle East, away from putting money into the Korean market. However, investors from Western countries are more sensitive to the country's economic fundamentals. In that sense, it will be worth watching to see if these investors regain interest in the market.
And third quarter GDP growth in the U.S. will be another point of interest this week, right?
That's right. The U.S. Commerce Department will release the final version of Q3 growth on Tuesday local time. Experts expect it to show a small downward revision due to a slightly quicker pace of inventory reduction. The U.S.'s GDP advanced at a 2.1% seasonally adjusted annual rate last quarter, the Commerce Department said a month earlier, up from the initial estimate of 1.5% growth. The economic indicator will be a key for investors to see whether the Fed's decision to raise its policy rate for the first time in nearly a decade can be justified or not. Along with falling oil prices and other spillovers because of that, investors are also worried that the U.S. economy is not quite ready to escape its ultra-eased monetary policy. The Q3 growth rate will at least provide some hints in that regard. This has been Choi Jin-seok from SBS CNBC.
So how much are we going to be paying for our meat next year? We're likely to see the price of hanwoo or Korean beef to leap once again, while the cost of pork and chicken are set to fall. Our Eunice Kim has the forecast.
The price of hanwoo, or beef from locally bred cattle, has been on a consistent climb since the start of the year. And next year, the prized meat is projected to become even pricier, with first-class beef to fetch upwards of 19,000 won, or $16 per kilogram, a hike of 36%. In line with the government's cattle reduction project, Korea's herds have been shrinking, declining by 100,000 heads this month compared to a year ago. Another 80,000 cattle are expected to be gone by March. Thus, prices are currently at their highest since 2010, when the country was rocked by an outbreak of foot-and-mouth disease.
We anticipate the decline in supply will continue for about 2 to 3 years. So assuming hanwoo demand maintains its current pace, prices will stay strong for at least 2 to 3 years.
On the other hand, the number of pigs bred is forecast to grow, pulling down the cost of pork next year, while chicken, facing oversupply, could see their producer price fall below 1,000 won, or 85 cents per kilogram. Key to Korean sauces are allium vegetables like onion and garlic. Their prices are expected to rise as their cultivation area is said to shrink next year and frequent rain and snow are in the forecast. But the difference won't be huge as the government opens the door to stockpiles and expands their import. Eunice Kim, Business Daily.
The race to deliver self-driving cars is getting fiercer among global tech firms like Apple and Google. But Samsung, on the other hand, has its eyes set on the components that go into these autonomous cars. Our Lee Joo-young has more.
Korea's Samsung Electronics has created a new business division to tap into the automotive electronic components industry starting from next year in its efforts to find new profit drivers. The company said it's a, quote, preemptive response to business uncertainties as it's been struggling with flagging smartphone sales for 2 consecutive years. The company said it will initially focus on developing in-car entertainment, satellite navigation, and autonomous driving technologies for next-generation cars, with the market set to swell to $303 billion by 2019. Experts say eventually the new division will work with other affiliates like battery makers Samsung SDI and electric component arm Samsung Electromechanics to create a synergy effect that will result in direct competition with Korea's other electronics giant LG. LG Electronics reported a $406 million revenue in the third quarter from supplying 11 core components for General Motors' new electric car Chevy Bolt due out next year. While the global smart car market is likely to grow an average 6.7% annually, experts say it could still take years for Samsung to see any significant profit from its auto parts business. This is because product cycles are longer in the auto industry and require stricter safety regulations compared to consumer electronics. 이주영, Business Daily.
And that wraps it up for today. But we'll be back tomorrow with more at the same time, same place for your Business Daily. So don't forget to tune in then. Thanks for watching, and bye-bye for now.